principal agent problem.
$22 billion!
So Jordan doesn't think the specifics are important here, but I think I best explain them.
Well, where are your quotrons here?
Quotrons?
Yeah, computers.
No, we don't even need computers here. We just trade right off the pink sheets here.
Pink sheets?
Yeah, they're penny stocks. You know, companies that can't get listed on NASDAQ, they don't have enough capital, their shares trade here.
Penny stocks?
Yeah.
6 cents a share? Come on. Who buys this crap?
Well, I mean, honestly, mostly schmucks. Postmen, there's always postmen.
Right. Is this stuff regulated, or are you guys, what are you doing here?
Sort of.
Sort of?
So what we have to remember about the context of this film is this is happening in the late 80s and early 90s. Now, that is coming at a time after a raft of deregulation within the financial markets. So under the presidencies of Reagan and also the prime ministership of Margaret Thatcher in the UK, what we saw was massive deregulation of the financial markets. So rules and regulations around what could and couldn't be done were made more vague, or they were just entirely repealed. So that's why stuff like this could happen at this time, and what Belfort is basically exploiting here in order to do his dodgy dealings.
Jesus Christ, the spread on these is huge.
Yeah, and that's the point. What's your name again?
Mine, Jordan Belfort.
Jordan, what do you get on a blue chip stock?
I make 1%. Well, I did make 1%.
Pink sheets, it's 50.
It's 50%? 50% commission?
Yep.
For what?
It's our markup for our services.
So if I sell a stock at $10,000, my commission is $5,000. Hello, John. How you doing today? You mailed in my company a postcard a few weeks back requesting information on penny stocks that had huge upside potential with very little downside risk. Is that right?
So what they're talking about there is obviously the commission that Belfort makes if he sells a share. So a 50% commission is pretty incredible if you sold a share and if you're a broker. And now we see the problem that's occurring here, and it's actually a problem that we discuss quite extensively in economics, and it's called the principal agent problem. So what we're going to go on and see in the film is Belfort here is going to sell a load of these shares to a load of people. He's going to hype them up and give them misinformation. Now, his incentive, his objective is obviously to secure that commission. He wants to get that high commission, and he gets that if he sells. So his incentive there is different. He is the agent, and his incentive is different from the principal. The principal in this case would be the buyer, the investor. The investor obviously wants to make a steady, safe, or as safe return on their investment as is possible. But what we basically see here is actually, well, Belfort's incentive is to sell these shares with the highest commissions, not with the safest return. And this is where the problems begin, because these investors are relying on this broker as kind of a source of knowledge and a source of advice when they really shouldn't, because obviously the incentives of the broker are different to the incentives of the investor. And in fact, the principal agent problem is a theme within the book that I recommend, Freakonomics. And this goes over the principal agent problem from the perspective of the housing market. So it looks at estate agents and how their incentives are different from housing sellers. So what we tend to see is actually when estate agents sell their own homes, they tend to keep it on the market for a longer period of time. Whereas when they sell other people's homes, they tend to want to get a quick sale. And that again is linked to commission, because obviously those people that are selling the home can make more money if they sell 3 homes rather than take more time to sell 1 home for a longer period of time and get the seller a best price. So think about it. If I could get you an extra $5,000 but I only make 1% of that $5,000, well, actually it's better for me to sell more houses than it is for me to really put my time and my effort into helping you as the seller out. So it's really interesting how information asymmetry, or gaps in information between buyers and sellers or advisors and end consumers, can lead to then these negative market outcomes. And it's something that I think is dealt with quite effectively in this film. If you're enjoying this video so far, then please consider subscribing. I'm trying to hit 1,000 subscribers by the new year. I don't know if it's possible, but with your help, maybe we'll get there. But let's continue with the film.
It had to be perfect. What is that kid doing? What's he doing? Biggest IPO in this firm's history. What the f is he doing?
So an IPO is an initial public offering. So what they're doing is they're taking a private business, in this case Steve Madden, and they're offering it to the public for sale of shares for the first time. Now, normally this is dealt with by big, reputable investment banks, and actually there's a little bit of competition in there because if you launch a big business and take it to IPO, you get quite a lot of credit out of that, and also you have an opportunity to make some money from that in a legal sense as well. So often what you see is big institutional investment banks competing to kind of win over that client to take the company public. We obviously see here that Stratton is neither of those big or particularly legitimate investment banks, and the way they got this IPO, as it said in the film, is because one of the owners, Danny, knew Steve Madden from school. But they're taking this business public today. So today, the market will freely be able to buy and sell those shares that they're offering. And of course, a business goes public for many reasons, but the main reason is normally to gain capital for investment and to grow the business. So they offer these shares in exchange for money, and they can then use that money to invest with and grow the business. It also obviously just gives the business more legitimacy, the fact that they can say they're registered on a major stock exchange.
Is he wearing a bow tie?
Hi. How you doing?
Good.
You clean the fishbowl?
I had a minute and
You had a minute. And today you needed to clean the fishbowl today?
I had finished my paperwork and so just had a couple minutes.
Okay. Nice to meet you. A new issue day? A new issue day? This is what you do! Hey, everybody, listen up! This is what happens when you with your pets on new issue day.
Now, I'm not sure about eating a fish, but IPOs are definitely a stressful time for the investment banks and the institutions that are taking the business public. Often at these times, the people working on this project will be working every waking hour of the day. They will be sleep deprived, etc. It's a very, very competitive and brutal business that I'll be working in. So I wouldn't expect tempers to be a little bit shortened like they are here. And actually, if one member of the team isn't really pulling their weight, there's going to be repercussions from that. I think this might be a little bit too extreme. I don't think you get away with this these days. I mean, this was the 90s, but still, there definitely is kind of this internal understanding that actually it's all hands on deck and we need to get this done. So yeah, in some ways it's kind of accurate to look at how like amped up and stressed these people are at this time. But I definitely think that's kind of the world's smallest violin, given the salaries they are making and the bonuses they'll get once this project is completed.
At 1 p.m., we opened the stock for sale at $4.50 a share. By 1:03, it was over $18. Even the big Wall Street firms were buying. Of the 2 million shares offered for sale, 1 million belonged to me, held in phony accounts by my rat holes. Now, once the price hit the high teens, you know what, who gives? As always, the point is this.
$22 million in 3 hours!
So Jordan doesn't think the specifics are important here, but I think I best explain them. So how exactly did these guys make the $22 million in one day, basically? So what he was saying about rat holes was basically Belfort had bought up a large number of shares in Steve Madden before the company had become public. And he did this with a load of his co-conspirators who bought the business in their name in order to avoid suspicion, because obviously if his name was on the ownership forms of that business and he was the person taking the business public, that would obviously rouse a lot of suspicion. So what's happening is Jordan owns all of these shares, but Stratton is the organization taking the business public, and obviously Jordan controls that organization. So what Jordan's doing here, and we see this in the speech earlier in the film where he's screaming and shouting and throwing the Rolex, is he's trying to pump up everyone at Stratton to go to their clients and hard sell them on this stock. And we know in the market, when there's more demand for a stock and it's selling well, we're going to see a higher price for that stock, which pumps the stock. So this is the pump element of what we call a pump and dump. So as Jordan was saying at the end there, they waited until the stocks hit the high teens and then they sold their position. So they bought these stocks for pennies on the dollar and they were selling this stock for the high teens, meaning they were able to make $22 million, and they're popping open the bottle of Dom Perignon there. And it's funny because at the end there, we see a cameo from the real Jordan Belfort at this sales lecture and these sales lessons that the Leonardo DiCaprio Jordan Belfort is giving. And I think this is kind of the moral of the story that Martin Scorsese was trying to get with this film. He was trying to show actually how these people do all these illegal and immoral things, and actually in the long run people still deify them, and really they shouldn't. But it's also interesting, I think, for the people watching, do you kind of think that Jordan Belfort was clever for doing what he did? Is he a good businessman? Is he just someone who played the game and played the system and was caught? So I hope you found that interesting, guys, and you found those comments insightful. If you did, then consider giving this video a like, and until the next time, bye-bye.